Hello everyone. While Bitcoin is moving sideways, well, a little bit closer to $10,000, almost touching it actually with a little decline of this sideways price action as we actually expected and discussed in the previous videos, I would like to share with you a couple of the updates on very important metrics which could be useful for technical analysis of price of Bitcoin. Maybe it would help you to make a proper decision on your trades. So first one is Meyer Multiple. This is basically a price of Bitcoin divided by 200 days moving average, and the interesting thing that of course it actually had a nice correlation with highs of the global cycles of Bitcoin and the previous ones as well, and moreover it even almost predicted the drop, the bottom in 2015, you see here, and almost on the same level in December 18th, so we can pretty much buy around this point. It didn't go that low though, but still. But what is interesting right now that also it has a moving average of the metric itself, 200 days moving average. You see this orange line. And also recently we reached the level which was very close to the previous highs on the growth of Bitcoin price over here, almost like a last phase of the final growth. And again, we touched this level and went down after that. It was another signal for the fact that we may have a correction. And right now, at the moment, we see the intersection of this multiple with the moving average. You can see that previously we also see the cases of the intersection of the metrics with its moving average, and it always happened when we had the corrections. And at the lowest point of the correction, we saw the lowest point of the metrics below its moving average. And in fact, it never ended, except a very few cases at the beginning, that we were closing above the moving average, especially at the last two peaks over here, which are similar to one which we have right now. So we had the drop below the moving average and then abruptly returned back. So based on these statistics, one would expect that we will see the same here, like a squeeze below the moving average and then return back, but apparently that will happen when we will see the price having a dip, maybe 5-10%, who knows, but still below the previous local low. Of course, it's just statistics. Maybe it will not be the same this time, but I think you should be aware of that. And another interesting metrics which I was going to update today is the Boyle Multiple, which is named after David Boyle. You remember his works on on-chain analysis. So basically, in order to get this multiple, you first need to get a dollar value of mined coins on a daily basis and then divide it by its moving average on the period of 365 days. So then you would get something like this. Apparently, one of the interesting parts of that is, of course, you could also use it to spot the bottoms. And according to these metrics, you pretty much would be able to buy at $3,500 in December last year. And also it correlates with the all-time highs for the price in every cycle. But again, locally, it is interesting because at every point of the halving event, at least before that, it reaches the level of something like 1.6. So from the time point when this article was written, it was expected that this metrics will go something like that. Now you can look at this metrics on TradingView, and what is interesting that it already reached the level of 2.5, much higher than the previous peaks before the preceding halving, but without taking account the magnitude, it actually looks very similar to what we have around here. And if you'd follow the historical example, then these metrics should go sideways. So like here, you would expect it to go sideways and then spike before the halving, when people would expect the decrease in daily supply of Bitcoin, and then dropped. So if we would look at this area with the correlation of the price, then we would see that this was actually another correction. And the lowest point of this correction happened before the top of this metrics, and then the flat line of this metrics corresponded with a relatively flat move of the price of Bitcoin. Of course, there were some highs and lows, but pretty much going sideways with a slight increase in price. And then we had the rise before the halving event, so in principle you may expect again a sideways price action over here without making a lower low, and then a sudden increase in price before May 2020. Maybe actually it would be like December or January, and it would correlate with stock and flow ratio calculations from plan B, but it goes well with expectation of the sideways price action for a long time, as many people claim. And finally, I was going to mention this one, the Bitcoin's daily issuance metrics, which we touched just at the beginning of the second part of the video, and just wanted to remind you that according to these metrics, every local high which we have lays at the same level as the next local low. So for this high we can have this low over here, for this high we can have this low over here, and for this high we can have this low over here, almost ideally predicting local highs and lows. So for the next all-time high which we have for the price of Bitcoin, refer to these metrics. Maybe it will give you a hint where to sell and fix your profits. Alright guys, you may say of course that those are two quite different scenarios and maybe it raises more questions than gives answers, but I still hope that it is somewhat useful. So see you tomorrow and thank you for watching.